Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly recap for September 17th through the 21st. We're going to be taking a quick look at last week's, up or downs, which we can see clearly in the little image here. Then we're going to be going over this week's changes for the S&P 500, Dow Jones, NASDAQ, and the Russell 2000. My portfolio, whether it went up or down. Go over a bunch of stocks that we discuss over on Facebook, and we'll also discuss on the news from MU earnings to Amazon being investigated or doing their own investigation to financials coming off those lows, and then ended it over talking about oil, gold, silver, bonds, and an interesting article how they're going to be changing the S&P 500. Thought that was pretty cool. I posted that over on Facebook. So that's what we're going to be doing today. If you guys do like the video, hit that thumbs up button below, and if you are brand new to the channel, hit the subscribe button. I highly appreciate it, and let's go ahead and get started. So last week, S&P 500 up 1.16%, Dow Jones 0.92, NASDAQ 1.36, the Russell 2000 up 0.5. My portfolio was up 1.26%. NASDAQ did take the cake last week, but they got a bit hit this week. So over on my Facebook group, some of the stocks we're going to be discussing this week was Coca-Cola, because they're trying to jump into that whole drinks infused with CBD. I kind of posted an article there how Coca-Cola could be making a deal there with Aurora Cannabis. I thought that was really interesting if they can get into that. I had a couple comments here. If Coca-Cola could diversify and get some edibles, that would be an amazing thing. I like Pepsi over Coca-Cola just because of the diversification that Pepsi provides over just sweet drinks and other drinks. So Monday, lots of negative there. All your FANG stocks fell on Monday. I posted this on Monday here. I thought it was a great opportunity to buy. I know I bought some stocks on Monday, but mainly just dividend stocks within my wife's Roth IRA, just a scheduled deposit. But if you guys bought this week, Monday would have been your best day to buy there. For the most part, I released a brand new article covering 5 stocks, best dividend stocks coming up with ex-dividends next week. We had 5 ticker symbols right there. I picked RSG as sort of like the win as far as what the metrics go, but they didn't do so well towards the end of the week, but it's completely fine. Short-term losses, wins, it is what it is. WP Carey announced a dividend increase from 1.020 to 1.025, so very tiny thousandths of change there. Stanley Black & Decker, ticker symbol SWK, bouncing and coming out of their 200-day, they broke above their 200-day moving average, had a nice little run up there. MU beat earnings, but fell towards the end of the week due to some announcements. Marcus, if you guys are invested in a high-yield savings account, or if you guys are currently invested in like a brick-and-mortar bank where you're getting that 0.0004% yield or interest rate, check out Marcus. They recently bumped up their high yield savings, their interest rate to 1.9. If you have $100, $1,000, $10,000, you can make basically, better return than you would in a traditional savings. I use them. It's not an affiliate link there. I don't use them besides using their services. Apple, come Monday, they're going to be changing the sectors around and kind of reshuffling. I thought it was an interesting read. Alphabet, Facebook, Netflix are about to move and get kind of reshuffled. Telecom dividends was like a specific, it's going to be affecting the different funds, ETFs, and we'll talk about that and go over the article. I put out a video on Friday. I had this is sort of a response. I was talking with another investor, viewer, subscriber, and we were chatting about how Stanley Black & Decker, why invest in something with such a low yield of 1.66 when you can invest in stocks that have a 6% yield. So I went over 3 comparisons there, put out that little video there, and then I put out this week's changes for the weeks, my dividends that I was paid, and I didn't take the complete loss in comparison to the NASDAQ and the Russell, but I did get wrecked this week due to Apple losing, 2.76% this week, so my portfolio basically stayed flat at a loss of 0.06%. So going over the 4 main indexes now, S&P 500 this week, 3 out of the 5 days positive, 5-day change up 0.85%. The Dow Jones, 4 out of the 5 days, they're the winner this week. If you have a dividend portfolio, my dividend portfolio blew all my other portfolios out of the water this week. 5-day change up 2.25% this week. So if you look over here, my Apple, which is basically my entire IRA, lost 2.76%. My dividend portfolio made up for that loss and kind of basically countered the loss there. So we'll see kind of going forward. NASDAQ, 2 out of the 5 days, positive 5-day change, down 0.29%. Technology stocks, importing stocks, they got kind of hammered this week early on Monday with news of higher tariffs and being implemented and stuff. I know there's a craze going on with all that on Monday. Russell 2000 is your loser this week. 2 out of the 5 days green, coming in at negative 0.55% this week. They basically lost all of last week's gains. So everything else did fairly well in comparison to the past week there. So stock futures are currently positive, but again, no representation of how Monday will play out. Monday, Trump could come out saying a whole bunch of stuff on Twitter going over tariffs, and that could cause the markets to kind of move lower there as well. But overall, if everything stays pretty calm, I could see Monday being a pretty positive day, especially with Apple having lost 2% this week, and a bunch of your other FANG stocks coming in at a negative loss. I believe Netflix got bumped up this week, and they raised their price target. Coca-Cola, again, we discussed a little bit about them on Facebook, had a nice little bump on Monday and on Thursday, up 1.28% this week. Year to date, up 1.53%. So between just a couple weeks, Coca-Cola has been coming out of those lows for the year. Facebook had a 5-day change, up 0.38%. They were kind of hammered on Monday. I think they were like the best of the losers on Monday. So they're still trading pretty low. If you want to, I don't recommend buying Facebook myself. Not something I'm interested in, but still at a good opportunity. 5-day change, up 0.38%. Amazon this week got hammered. Amazon came out announcing they were investigating some data leaks and bribes that had been going on to take advantage of their merchants. Some sort of merchants selling their products on Amazon. Amazon dropped 3.16% on Monday. Guess what happened on Tuesday? They announced some new products. Amazon came out saying, hey, we're going to be getting 8 new Alexa-related products going out of the market. I believe it's either 6 or 8. Their stock bounced back up 1.73% this week, but it wasn't enough there. They got hammered again on Friday. I forgot what happened Friday. I'm not sure exactly what happened Friday, but 5-day change, Amazon down 2.80%, which actually puts them below their 50-day moving average right now. So, which is interesting there. Apple hammered this week, mainly on Monday. I don't know what the news was on Apple besides imports from China. I didn't see any articles there. Let's see if there's anything here. Our international firms destined to fail. So I think this is mainly just tariff related. Trump coming out announcing a whole new set of tariffs being implemented on China. A lot of Apple products are all imported over there. So Apple got hammered pretty hard on Monday and Friday. 3 out of the 5 days up positive, but still ending down 5-day change, down 2.76%. This really held my portfolio back this week, but hoping to get that all recovered here in the future. I am a shareholder of Apple. Disclaimer, Netflix, 4 out of the 5 days just straight negative, but they had a huge gain there on Tuesday as they were upgraded from my price target of $360 to, I don't have it in my notes. Yeah, I don't have that in my notes. I believe it was 370 or some higher point, somewhere a little bit higher. But what I had read is that some of their numbers for new subscribers were not tallied into the current stock price, so they raised their stock estimate to meet that certain amount. So currently, Netflix down 0.92%. Could be a good buying opportunity. Up 88% year to date. Microsoft also, not a whole lot of news that I was tracking as far as Microsoft goes. I thought it was just an interesting stock to kind of cover. When I talk about the FANG stocks, I always like to include Apple and Microsoft because there was the FANG and there was the FANGMA. So Microsoft up 0.79% this week. We have Alphabet or Google down 0.5% this week. Bank first. Okay, so these stocks here were some of the ones I covered in my article. 5 stocks to buy with ex-dividends coming up next week right here. So these are going to be the 5 stocks we're going to be covering. So Bank First Corp up this week, 2.62% this week. We have Equity Lifestyle Properties. I believe this was, what was the ticker symbol? ELS. Okay, this wasn't the one. I believe they had 7 years of increase in dividends, but 5-day change up 0.69%. MTT, this was an interesting stock. This has been like a 40-year dividend grower. They've been raising their dividends for the past 40 years, year over year, just bumping it up. 5-day change up 0.87%. We have Portland General Electric down this week. I believe utilities as a whole got pretty hammered this week. 5-day change down 2.26% this week. Year to date up 0.5%. We have Republic Services. This is another article or another stock we covered in the 5 stocks. 5-day change down 0.37%. And then going into, I don't know why I had that one. I think I was just checking that one out. So Stanley Black & Decker crossed our 200-day moving average and broke out here. So 5-day change positive 5 out of the 5 days, up 5-day 4.06% this week. Micron Technology. So Micron came out prior to their earnings getting announced here on Wednesday. Their stock rose up pre-earnings. Earnings came out, beat expectations, beat revenue, beat earnings, but they mentioned that going forward, due to the tariffs, their financials could come out a little lower in the future. That caused their stock to sell off, dropping by almost 3% on Friday. 5-day change still positive, up 0.99%. FedEx also came out with earnings. They missed. I don't know if they missed their. I know they disappointed. They had some terrible earnings. They came in less than expectations on their earnings per share, which caused them to fall by nearly 5.5% there on Tuesday. They did recover. I know a lot of investors in the Facebook groups over on Facebook. If you type in dividend groups, there's a whole bunch of Facebook groups out there that pertain to dividend stocks. They were buying up FedEx. They said, hey, this is a great stock. It dipped nearly 6% on Tuesday on a bad earnings. Could be a great opportunity to buy. They have a nice yield as well. Recovered very nicely here. If you had bought on that dip, 5-day change up, or 5-day change down 3.18%, down year to date 0.89%. Between FedEx and UPS, I believe there was another channel that just did a comparison video. I'm not sure there. JPMorgan financials are coming off those lows. So bank stocks on, I believe it was Tuesday or Wednesday, that yield crossed that 3% range. Bank stocks through the week moved higher as sort of the other sectors have been kind of transitioning. There's been a lot of money flow coming out of the technology, moving into financials and consumer. So those are some interesting sectors to kind of take a look at. I believe the consumer ETF is XLC, and then the financial is XLF, but we can take a look here as well. So yeah, bank stocks, they moved off their lows. So JPMorgan up 3.83% this. JPMorgan's always done really well in comparison to Goldman Sachs. Wells Fargo holds a lot of issues outside of their financials, but JPMorgan's, they were pretty much flat just a few months ago. I know I did a video covering half of the Dow being in the negative, and JPMorgan was one of them. So 5-day change up 3.83%. Goldman Sachs, still your loser as far as the financials go that I mainly track, down 7.62%, but caught a very nice increase this week, rising 2.66%. And Bank of America also jumping up very nicely on Wednesday. I believe Wednesday was when that yield crossed that 3% threshold. Outside of that, I didn't see a whole lot of news for financials, but that yield curve. And then the ticker symbol for the fund for the ETF for the financial sector is ticker symbol XLF. That had a 5-day change of 1.81% there. So if you want to diversify yourself a little bit, I don't like that they have Wells Fargo up so high above Citigroup and Goldman Sachs, but it is up there. And then kind of going into our article here that we posted. So Alphabet, Facebook, and Netflix are about to destroy the stock market's biggest dividend trade. Marketing leading companies, including Alphabet, Facebook, and Netflix, are changing the S&P 500 sectors on Monday, with big implications for investors who use technology, consumer discretionary, and telecom index funds and ETFs. So basically anything there that has to do with technology, consumer discretionary, telecom index funds, or ETMs are about to kind of get swapped out. So the new S&P communications sector that replaces the telecom index will include these big tech stocks, changing the nature of what has been one of the market's best defensive, highest dividend yield stock strategies. So they're basically going to be moving these around into different sectors. This is all because technology has grown to become roughly 26% of the S&P 500, a level that worries many investors. If you look at the gains for the year, I believe it was some crazy amount. Like most of our growth for this year comes from the FANG stocks, comes from Amazon, from Apple, Google, Microsoft, and those other companies as well. So there's a huge market cap. So this is a really interesting article. I did post this over on my Facebook page. I have an article or a link in the description below, and then it's located here. No, it's located a little bit above there. So I just posted it out there 12 hours ago. So it just came out today on Friday. So interesting article. If you guys want to read through it, it's a pretty nice little article there to kind of read and kind of go over all the changes they're planning on doing. So SPDR, this is the S&P Home Builders ETF, ticker symbol XHB. They are down, 5-day change down 1.14%. I know on a lot of the Facebook groups, the Facebook real estate groups, they're seeing trends as far as, if you follow Graham or Kevin, or those are probably the more popular real estate related channels. I know Kevin made a whole bunch of videos talking about Cali topping off, kind of cooling off period, and I've seen a lot of Facebook mentions saying that, hey, prepare, but I think it's just kind of like a market cooling. I think we're still doing really well, lots of growth in the economy, jobs being available, wages aren't really kind of keeping up right now, but I believe that's going to be changing in the near future. So currently, Home Builders ETF is down, but doesn't really pertain to all of that fun stuff. So Oil did have some interesting news. I'm not going to go and read this. Here's the main news for this week. But oil prices did pop up this week, basically coming out. They said that the Iranian sanctions kind of, the U.S. was hoping that others would kind of pick up the slack and kind of keep the prices lower, but they didn't come out with as much supply as they had planned. They actually came out with much lower supply of barrels than was, needed and estimated. So that did cause the oil fund here, ticker symbol USO, to spike up 3.17% this week. So a very nice gain there. Oil has been coming off their highs for the past week after week after week. And the dollar, I heard the dollar got hammered. I didn't really track this week. Yeah, so it fell. Dollar started off around 94, 95 this week. Fell all the way down to 94.19. So as the dollar falls, as the yield curve raises, that's helping out financials. Money is becoming cheaper. It's not as much debt to take on and have to pay back and such. So I think that's what kind of helped the financials out this week. Dollar falling and the yields kind of flattening out there. Silver, as the dollar falls, silver and gold rise. So for the most part, doesn't always happen. Silver Trust Fund up 5-day change 1.59% this week. Gold up 0.42% this week. If you were to invest in either of these, don't buy the funds. Go out there and just buy physical silver, physical gold. I think it's a debt asset, but I do have some silver that I was handed down some. So Vanguard Band Bond Market Index Fund, ticker symbol BND. Bonds down this week, 0.2% this week. I know I've talked to a lot of other investors talking about bonds. They've asked me, hey, are you invested in any sort of bonds? How much of your portfolio is made out of bonds? I actually don't have any sort of bonds in my portfolio. I was kind of thinking there. So I don't have any bonds. Don't plan on buying any bonds. I'm still invested for the long term here in the market. I don't have I don't think I have too much money invested in the market in comparison to where I had, early in a couple years ago. I've kind of transitioned out of the market and more into real estate, buying physical assets. So that's why I'm not too worried. And so last yield, where are we to look at? Where do we go? Right here. Prime rate has stayed the same for the year. Last yield, 10-year, so 10-year here is up over that 3% range. So 10 years currently sitting at 3.07 and continue to sit right at that level. So a lot of investors are looking at both the 3-year yield and the 10-year yield, and both of those are sitting near that 3% range. I believe that 3-year one was. So interesting. I think that is it for this video. So overall, recap for the week. S&P 500 moved up 0.85. Dow Jones was the winner this week, moving up 2.25%. The Nasdaq moved down 0.29. The Russell 2000 was your loser this week, moving down 0.55%. And then my portfolio basically stayed flat at a loss of 0.06, all because of Apple. But it's okay. Apple's made me, pretty good there. Return over the last few months. So that is it for this video. If you guys did like the video, remember to hit that thumbs up button below. If there's anything you guys would like to have included, changed, reworded, let me know in the comment section below. Leave me a comment. I like reading your comments and I always reply. If you guys want to chat, you guys can head over to Facebook. I have my Facebook group, The Financial Investor. Then I also have my Facebook group here. If you click on my link here, you can go to stocks, dividends, value investing, real estate, and all sorts of other information. We discuss, real estate, going over rental properties. We're just talking about buying duplexes. I'm in contract in another property I'm buying besides my new 3-1. And we've had a lot of discussions here recently, so it's a lot of fun to just kind of chat back and forth with my viewers, subscribers, and those that are in the Facebook group. So if you guys want to check that out, it's all in the description below. And that's it for this video. As a quick disclaimer, I am not a financial advisor or tax professional. The information provided in these videos is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor myself trying to help others make their money work for them. And of course, that's it. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.